Andrew Holland, who's joining us today on the show from Avendus. Andrew, a very smart rally which is going on. Do you think it has more legs and this surprise pause from the RBI was not in the price?
No, I don't think it was. I think everyone was going for a consensus 25 bips hike, and obviously he's delivered is all a nice Easter egg ahead of the event. So the good news is here that we were all worried, right? I mean, we're all hoping that he wouldn't increase because the economy, whilst it's still strong, it was kind of faltering along the way. More recently. So I think this gives it the extra impetus now for the second half of the year, and I'm talking about the fiscal year, to see that kind of, capital expenditure, private capex, start to play out and give India that kind of boost that, things are an end. Now, question is, he's obviously himself said, I might have to look at data and so forth and so on. But, I think we're at the end of the tightening cycle anyway globally. So it's a smart move because I think if anything, rates are going to fall globally towards the back end of the year as, the kind of slowdown gathers pace and recession worries kind of come to the fore. So I think I think we can look forward to a pause, then lower rates going forward.
Mm-hmm. Andrew, what's your positioning in the market right now, in light of how the RBI stance has changed, and also in light of the data which is coming in from the US? A lot of PCE data, Q4 GDP data, ISM data, all has weakened. Could that force the hand of the Fed as well?
Most definitely. It's just when is it the next meeting? Are they going to go on hold? My guess is this. I'm sorry, not my guess. My firm belief now is that we've always said two things would force the Fed to go on hold. One would be any unintended consequences of higher interest rates, which we've seen through the banking system, both in Europe and the US. And the second is, as the economy slows down, that you get towards that recession, that obviously they start to kind of go on hold. So you have both of those factors playing out now. And I think the economy will start to slow very markedly now in the US. We've seen it in the jobs data, as you mentioned, which is the last leg to fall. But obviously, you still have to keep your eyes open around the kind of mortgage market and around the credit markets to see if there's any other pain that might be emanating from there with these higher rates. So I think we're there or thereabouts done. And I think, going into the back end of the year, we can look forward to lower rates. So this move by the RBI is a smart move in my mind.
Right. Andrew, in this kind of an environment, how big a challenge or a risk do you see as on growth? Because, there is a very kind of a split view on growth on India. One view is that India will also suffer on growth a bit if global growth actually stalls. The other view is that the RBI's view perhaps that they are, very firmly on the ground as far as growth is concerned. Can we actually de-link from global slowdown and do very well individually as well?
So I don't think you can ever de-link from the global factors, that's for sure. If there's a recession or mild recession in the US, that will affect exporting countries in particular. But India's not, in terms of that pecking order, is not the big exporting country. We've always been known for our domestic demand. And I don't see that moving away from us in the kind of next 12 months, even if there's a kind of global slowdown, which we're seeing anyway. So I think we have our own momentum, and obviously with the government capex plans, which they put in the budget, and private capex now starting to kind of, I think will unfold now after this going on hold. I think that gives you the momentum in the second half of the year. I still think this next quarter is going to be a little bit tricky. Because there's a squeeze on margins in some places and a slight slowdown. So I think the second half will see this acceleration. So if the consensus earnings views is like 10 to 15%, if the RBI would have done another 25 basis points, I would have said earnings growth for this year would be nearer to 10%. I think now it'd be a part of two halves. The first half will be a little bit kind of lukewarm, but the second half you'll start to see the momentum in earnings and you'll see upgrades. So I'm much more constructive on global markets than Indian market going forward. I just think for us, it's going to be a tale of the second half being better than the first half.
Right. What's your portfolio positioning right now, Andrew? Is it more large cap centric, or you think froth is out of mid caps and even mid cap, small cap in India have become equally attractive? If you could share some color on your portfolio construction.
Yeah, so the valuations of India have actually come down quite markedly, and now we're kind of near towards the normal mean. So that's making things a little bit more attractive. But I'm kind of low to kind of say that the index is going to move so much higher. But I think the themes that are going to play out is where you're going to make the money. So it's the banking sector for sure is where you're going to make money over the next, not just this year, but over the next 2 to 3 years. And then those other themes which will play, which we know are going to play out globally and locally, is we're going to spend money on defense, we're going to spend money on renewables. We've already seen the defense contract orders coming out. Unfortunately, it's a bit lumpy, so it's very difficult to kind of say when they're going to come. But that's not going to go away from us. So those two sectors are going to continue to see investments. Then you got the whole kind of the kind of security supply, kind of capital expenditure, which we're seeing companies, looking at India as an alternative to other places, and also Indian companies saying, you know what, there's an opportunity for us here to fill that gap globally. So electronics is going to be a big theme, I think, going over the next few years, not just from a domestic viewpoint, but from an export viewpoint as well. And the third is just travel and experiences. I think that's going to continue in India. So the whole travel industry, particularly hotels, and there's one area which I'm kind of liking more is the beverage industry, because I think people will continue to kind of upgrade from where they are today in drinking. And of course, we're a young population, so that's going to be a long-term trend, which I think will continue to see strong growth over the next 2 to 3 years. So whilst it's always seen as more defensive, I think you're getting growth in that defensive. So if I was to switch from, say, IT, where I think there's some near-term headwinds, even though it's the kind of safety in terms of the quality of earnings, you're not going to get much growth. Whereas in beverages, I think you're going to get that growth.
Andrew, are you more constructive on the market in India, or are you more constructive generally for risky assets? And where would India be? Is there a chance of outperformance? Because we have seen our share of valuation adjustment, or we would move in line with the rest of the world?
See, I think, and I'll talk about emerging markets first, and I'll talk about India within that. So when the Fed goes on pause, it's going to be soon, right? Everyone's going to be searching for growth because we know that there's a downturn coming in the global markets, and that's when emerging markets come in. So emerging markets will be your first port of call of where you're going to see growth, either from a recovery or for just general growth compared to the rest of the world. So you'd look to the exporting countries first to pick up that kind of, as the economy starts to recover back into the year, as interest rates, as the market looks even further forward. Now, relatively, the China, Taiwan's and Korea's, it's cheaper than India. So this first half of the year, you see more flows towards there. And India will get some flows, but might be an underweight kind of weighting that we need to. The second half of the year, I do believe that you're going to see that as our earnings start to accelerate, that's when we'll start to see the flow. So for us, it's a tale of two halves, which you're trying to point out. But I think emerging markets always, since I can remember, once the US goes into recession and interest rates start to fall, emerging markets do well.
All right, Andrew, thanks so much for your time. Always enjoy our conversations. In fact, Andrew started becoming positive on Indian market for some time now. So that hypothesis is playing out well.